What's up, Pumptown and friends? Welcome back to another update. So what do we got going on in here? Well, I hope you guys had a great weekend. Nice day off out of the charts. It's pretty sweet over here. Just hung out. Was in the garage a lot. Just chilling. Hello. Yeah, it was a very good weekend. Just chilling out. Weather's nice, so it's starting to shape up. Hopefully where you guys are, it's cold where some of you guys are at. Hopefully it's starting to shape up. So I kind of seen what I needed to see for a short-term bias off of the open. To no surprise, it gapped down a little bit off the open, so we'll talk about that a little bit. But we found our top of the week last week. Consequent encroachment of that gap, which is a premium fair value gap. So that's pretty cool. This should be gray. So that's actually really cool. And so I'm just going to keep it really simple and have this new week opening gap here. I'm going to take the gap, this fair value gap here. There's a sneaky midway point, and you got to use the top of this candle because there's a gap here. There's an inefficiency, so you got to include that. So consequent encroachment is this inversion fair value gap here, and that's on the table. So that's the weekly chart inside of our monthly candlestick. And now we'll go into the daily chart. We have created a swing high in a premium market at a really sensitive price point. And now we've got a bearish vacuum block. So this actually is singing a pretty good tune. I'm not calling the top at all. Don't do that. It's likely going to make another high. To what degree it would want to trade down? Well, just eyeballing the range, you can see we have a fair value gap at fair value. So, hello. It could trade here. It could come all the way down to here. It could come for here. I would, it's questionable. I don't know. I really don't. But once we get down into at least here and this gap here, look, it'll be a little more obvious. We'll have to go to the 4 hour, see if we can find a reclaimed order block in here. It's basically consequent encroachment of that, so it's cool. I like what's going on in here. So I'm just going to look back 20 days. Doesn't even matter. We're in a premium market all around. So pretty cool. I'll be looking for a short this week. We don't have a lot of news drivers this week, so don't expect a lot of movement. Our best case scenario is Monday doesn't do anything, and then Tuesday creates the Judas, or maybe even Wednesday. It's going to be really tough to try and trade up in this level. Like, it's not a cakewalk up here. The cakewalk's over. That was the cakewalk right there. So this is where the new trader would feel really good about themselves right now. Being that it was really easy to take trades in here. And the markets just have this way of railroading those confidence levels. So this is where, for me personally, I'm just dialing it back. I'm not going ham. And my risk is really low. Because if we're going to catch these expansions, we're going to make good money. So we're either, the trade's good or it's not. It's just how it kind of works. But for an intraday short, for at least till Thursday, this is what I'll be looking for. Because I'm bullish on the market, I would like to see it trade down a bit and trend. We've already made the higher high in the trend, so I'd be expecting the higher low. So just for a crude depiction, something like this. And it doesn't have to come all the way down here. And I'm inviting it. See, that's the difference between me and a lot of other people that you may or may not watch. They will just go, oh, look at all this buying pressure. Let's just keep going. No, the daily is a really good sense of trend, and we've made a swing high. Now, there's no bearish order block. Okay, we've hit the fair value gap. So look, if we start trading back outside of this fair value gap, obviously this is going to be an obvious target. And, maybe even this liquidity void down here. But if we hold that and we start flipping back above the new week opening gap this week, well, obviously we're aiming for the top of that and whatever else is above there. These equal highs, I mean, man, look at that gap. There's some stuff up here that says it's going to go up. Look, we don't have to even pull back. The last time we did a big turbo dip and we ran it back turbo like that, we barely got any trend. It was like up only for days on end. There was like only a couple of spots. Here, I'll show you what I'm talking about. It was fun. Even before that right there, it was just literally up only. There was only a couple of spots. That was fun. So that's pretty much, you could frame the idea that it could want to do that. And if we want to run out this high for before summertime, this is going to be when it's going to do it. So I'm on the lookout. Basically, what I'm looking at is this price range here. So if I'm going to be long in a discount on a daily chart, then I can be short to it intraday. And that's when I would permit myself to take shorts. Because look, once it starts running somewhere, it becomes kind of obvious. Once it gets down into here, if it makes our model, then we're going to have a really nice time the next little while. And again, it could just go turbo upside. I'm down with that. That being said, now that we're in the daily chart, I want you to have this gap here on your chart. Because if it's really bullish, it's likely going to tap this and just take off. We'll paint this one. The yellow one looks like, yeah, we'll paint this one purple because this will be our special gap. This will be, if I was bullish on this, I would use this as a means of getting in sync with the uptrend. If I was bearish on this, I would expect a close below the midway point, and then I'd be using this as a key to key off to get into a short here intraday. Okay, and so in the smaller time frames, that's if we were to get like a close below the up close candle after taking all that liquidity, and then just coming down just a bit for that higher low in the trend and running up. So this is my basically this is support and resistance. And I'm not really sure if we do, like, I don't know. I don't know how far we come down or if we just bounce off of it and freak out. That's on the table. However, there's no real economic news drivers this week. So there was something else too that painted. Yeah, Bitcoin kind of lost control there. So it just kind of seems like all the signals that tell me that it's going to be really choppy this week, they're all there. So as long as price action dives hard Monday or Tuesday, then we could likely seek a nice reversal. And it might go Wednesday and right into Thursday. We might get a midweek reversal like on Thursday and then come right back up for the high and into Friday. We'll see what happens. It sucks when you're like, oh, it could go up or it could go down. That's just how it happens sometimes. So again, you might see this as a weakness, but it's a phenomenal strength to be able to forecast unfavorable price action, dial your risk back, dial your expectations back, not only of price action, but of yourself. Because if you're going to go in already forecasted unfavorable price, and you've signed that check where you're like, I'm ready to take this loss. My company, me dot incorporated, is ready to sign off on this loss and be okay with it. And you get to choose how much that loss is. Now, here's the kicker. You have to stop after. You have to accept your fate. And then you can experience long-term, consistent growth. God bless you all. Trade safe this week. Peace.